Yes, yeah. Can you pick up some chicken for us for dinner? Yeah. What? It costs $23 just for one chicken? Okay, okay. That's crazy. Oh, you fill up your tank today. Ah, nice. $132 for gas? Like, it's a mid-size sedan. For goodness sake. It's not even premium. Ugh. Hey everyone, how's it going? It's Colin again. It's without a doubt that we have all experienced an increase in prices in many sectors throughout the economy. Like everyday necessities such as grocery, gasoline, lodging, used car rentals when we're on vacation are just some of the basic costs of living that have skyrocketed in 2021, all because of what's called inflation. What is inflation? By definition, inflation is the decline of purchasing power of our money. Essentially, it costs more money for the same amount of goods or services that we would get. With the current rate of inflation hovering around 7% in the US, this means that if you and I had $100 today and we bought this pen with a 7% inflation, that means within a year from now, we can only get 93% of this pen. Or we could get the same pen, but now it will cost $107 rather than $100. Essentially, that's the highest inflation rate since 1982. That's longer than I've been alive. Oh my gosh. So you might ask, what caused this inflation that we're currently seeing in the economy? There are many different economic factors that cause this inflation, such as fiscal policy, interest rates, government spending. Well, here's a prominent one. With trillions of dollars that have been printed into the economy since 2020, this has caused an increase in a ton of supply of money into the economy. It's said that about 1 out of every $4.50 in circulation right now has been printed within the last 24 months. For example, the price of gasoline has gone up 49%, used cars have gone up 37% as we know it, the price of certain grocery items such as meat has gone up over 22%, lodging 17%, household energy 11.5%, furniture and bedding 14%, rent is at 4% increase. Last but not least is housing. With all that's taken into consideration, home prices have seen close to 20% increase in 2021. The biggest increase in 45 years, according to CoreLogic Home Price Index. That means that if your home that was previously worth $500,000 is now worth close to $600,000, and that $700,000 home is now worth close to around $850,000, and that $1 million home is coming in about $1.2 million, all within the course of 1 year. Ugh. So with the inflation that we've been seeing, what's going to happen to real estate in 2022? Look, this is just a logical guess and nobody has a crystal ball to predict the future. However, there's two important ideas to keep in mind when we're looking at inflation and how it will play into real estate in the next year. Factor number one, with prices going up all over the economy, one benefit of home ownership is that it offers stability in housing costs. And it's predictable in people's monthly spending or household budgets. One great way to protect against inflation is to get a 30-year fixed mortgage. In real estate, having a 30-year fixed mortgage is basically getting today's pricing still for 30 years down the road. Imagine if you went to buy a new car and you get to pay a price from 30 years ago, that'd be phenomenal. Or gonna get groceries tomorrow and then all of a sudden you're like, hey, I'll pay the groceries from 30 years ago. Like, let me repeat that one more time because I wish I would have known this 15 years ago. I wish someone would have told me this valuable lesson. So with the 30-year fixed mortgage, that's the benefit. When you go and rent a house, the rent starts to increase. Look, I've been a renter, I've been a homeowner, now I'm a landlord. I've always kept my rent low, like below the market to give fair housing for people and just to help others out. But at the same time, when things break and repair costs starts to increase, material costs starts to increase, I essentially have to increase rent to just cover that. And as a landlord all over the country, you're gonna see that play into rent increase in the next year. So as a renter, you don't control your rent, and if you've been living there for year after year and the rent's below the market price, great. But that doesn't mean that next year your rent will be the same. The landlord can give you a notice and then essentially raise up rent by $300 or $400 within a year, which throws you off your financial game and monthly budget. Factor number 2 is, as inflation increases, more investors will want to invest in an asset class that will protect them from inflation. It is said that some of the wealthiest investors in the world are preparing for this major inflation that's coming ahead. And what is the number one asset in their portfolio for inflation? You guessed it. Real estate. Real estate in the past has always been an asset class that has proven to hedge against inflation, especially high inflation. And real estate, unlike anything else, has a combination of appreciation value, depreciating debts, and increasing income ability like cash flow, appreciation, and your debts going lower, paid by the tenants. All these important factors are needed to keep up with high rising costs in the economy. For instance, let's just look at real number that we've seen from 2021. We've all lived it. Alright, if inflation was 7% in 2021, if you kept $100 in a checking account, basically by the end of the year, that value of that $100 is now $93. However, if you've taken that $100 and put it into real estate, it's now equivalent to $120, which would have helped to keep up with inflation. Once again, thank you so much for watching. We hope this video helps you with some insights on inflation and how it can influence the real estate market as we gear towards 2022. If you have other questions in regards to selling, buying, or investing in real estate, please feel free to keep us in mind and reach out to us. We'd be more than happy to connect with you. Once again, have an amazing week and wishing you and everybody safe and the best as always. Take care, everybody.